in 181 jobs.
Thank you so much. Next, may I now request the Honorable Minister for Information Technology and Digital Services, Dr. Parinivel Thiagarajan Avargal, and investors from the IT sector to join the dignitaries on stage for a group picture. The IT department has in total attracted investments worth rupees 22,130 crores, creating jobs for over 1,07,180 people.
Thank you. May I now please invite the Honorable Minister for Industries, Dr. T.R.B. Raja Avargal, and the investors from the industries sector to please join the dignitaries on stage for a group picture. The Industries Department has in total attracted investments worth 3,79,809 crores, creating over 8,07,026 jobs. May I please invite Group 5 to please join us on stage for the first photograph. Thank you. May I please invite Group 4 to join us on stage for a photograph. Thank you. May I please invite Group 3 to join us on stage? Thank you. May I please welcome Group 2 to join us on stage? Thank you. May I please welcome Group 1 to join us on stage?
Thank you so much. I kindly request everybody in the audience to please be seated. We're a few minutes away from the end of the program, so I kindly request everybody to please be seated.
Thank you once again to all of our esteemed investors. Thank you.
May I now request Secretary Industries Thiru Arun Roy IAS to kindly deliver the vote of thanks.
அனைவருக்கும் வணக்கம். As we have reached the concluding point of the two-day Global Investors Meet, I stand before you with a great sense of gratitude towards hundreds of people who work hard to organize this event. The Global Investors Meet 2024 was the brainchild of our Honorable Chief Minister, who felt that the state needs a mission mode effort to accelerate our growth towards a 1 trillion economy by 2030. Organizing this event, particularly attracting investments, took over a year of concerted effort. Throughout this journey, the Honorable Chief Minister guided us at every stage, and I sincerely thank him for providing us the leadership and confidence that made our mission a success. Honorable Minister for Industries, Dr. T.R.B. Raja, was our team leader, who was totally hands-on regarding every aspect of this event. He was also at the very forefront of engaging with investors and instilling confidence in them to invest in our state. Thank you, sir. I thank the Honorable Minister for Micro, Small and Medium Enterprises for rallying the entire MSME sector to support GIM 2024 and for conducting outreach events with the business community in all districts. I also thank the entire Council of Ministers for their unequivocal support of the various investment proposals brought before the Cabinet and for mobilizing investments in their respective sectors. I thank the Honorable MPs, MLAs and other people's representatives who have graced this occasion. We are honoured by the presence of Lord Tariq Ahmed, Honourable Minister of State, Government of UK. Thank you, sir. My sincere thanks to our special guests on the dais, Mr. Anand Mahindra, Chairperson Mahindra Group, Ms. Mallika Srinivasan, Chairperson TAFE, Mr. B. Santanam, MD and CEO, Saint Gobain, Mr. Karan Adani, CEO, Adani Ports, Mr. Venkatrama Raja, MD, Ramco, Mr. Shankar Vanavaraya, TamilNadu Head, CII, Mr. Lee, Vice President, Pouchen, and Mr. Parveez Sinha, MD, Tata Power, who have all taken time out of their busy schedules to be here to back the Tamil Nadu growth story. The Chief Secretary to Government has been a pillar of support in organizing this event. I like to thank the Chief Secretary through Shivdas Meena and also the Development Commissioner through N. Muruganandam for steering this event. I thank the diplomatic community for their enthusiastic and generous support and for participating in various associated events like exhibition, roadshows and country sessions. A special word of gratitude is due for our partner countries, UK, Japan, Australia, France, Germany, Denmark, Singapore, USA and South Korea. And also the international partners, Taipei Economic and Cultural Center and Western Australia. In the past few weeks, we have received the support of many senior officers of the state government who took care of various micro aspects of this event. Every department of the government at the state and the district level was involved with GIM in one way or the other. I thank all government officers of all departments who strive hard for this GIM 2024. I owe special thanks to my colleagues in the Industries Department, including those from Guidance, TIDCO, TNTPO and SIPCOT. The Confederation of Indian Industry has been our exclusive industry association partner, and as always, they have taken great care to meticulously organize many aspects of GIM 2024. I like to thank the entire CII team. I also record my gratitude to all the exhibitors, speakers of thought leadership sessions, and participants of various sub-events in the last 2 days. Above all, this is an event for investors. I thank all our investors who have reposed their faith in Tamil Nadu and in helping us attract 6.64 lakh crore of investment. The investors' response and cooperation for this event has been truly overwhelming. We look forward to working closely with you in the coming days to make your plans successful. I thank all our invitees, participants, industry associations, students, friends from electronic and print media, and various event partners who work very closely with us. Thank you. Nandri, Vanakkam.
Ladies and gentlemen, may I please request you all to be upstanding for the national anthem to be presented by Tejul from KM Music Conservatory.
जनगण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड़ उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्छल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जनगण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you, ladies and gentlemen. We're going to request you all to please remain seated as the Honorable Chief Minister of Tamil Nadu and the dignitaries on the dais proceed. We're requesting you all to kindly remain seated. We'd like to express our sincere gratitude to all of you for having joined us here for the Tamil Nadu Global Investors Meet 2024's Valedictory function. Thank you once again.
This was a true privilege and honor for us, and I'm sure you all have enjoyed yourselves as much as we did. Thank you very, very much once again for honoring us with your presence. And
மாண்புமிகு தமிழ்நாடு முதலமைச்சர் அவர்களுக்கு நன்றியை தெரிவித்து விடைபெறுகிறோம். Ladies and gentlemen, this is me, Sahitya Jagannathan, with me,
Divya Vijay,
and we are signing off. Nandri, Vanakkam.
பிரசன்னா சார் ஜாக்கெட் மறந்துட்டாரு. அப்போ கொஞ்ச நேரம் நம்ம தான் ஹீரோ. பிரசன்னா சார் சார் அப்படியே ஃப்ரெஷ்ஷா இருக்கு. தேங்க் யூ.
கம்ஃபர்ட்டுக்கு தேங்க் யூ சொல்லுங்க.
கம்ஃபர்ட் நாள் முழுவதும் துணிகளுக்கு நறுமணம் தரும்.
Welcome yet again to Outlook 2024. Today it's markets in 2024 with one of Dalal Street's best known, best loved veterans, Manish Chokhani, Director Enam Holdings, but that's a wrong way to introduce a veteran like you, Manish. Okay,
you make me feel so old, but thanks for having me here.
I call myself also a veteran sometimes. Okay, no, actually, when we talk of Outlook 2024, the first thing that comes to the mind is that 2023 was a damn good year, 20% high, and 8th consecutive year of index returns in the positive. Can we be 9th time lucky?
Well, I hope so. If I were a soothsayer, I'd be somewhere else. But see, the macro conditions for India have conspired very, very favorably, as is well known, and the market's reflecting that reality. Surely expectations are running high, and we are priced for pretty much perfect execution and Goldilocks scenario continuing. That risk always remains, but like it's always said that the big balance sheets of India, whether it's corporate sector, banking sector, government, are all in the right direction. So no real reason to say that we should have a big setback.
Okay.
And the big indices are not overvalued. No. You may argue something about the mid and the small and especially the SME exchange.
Yes.
But there's nothing yet in the larger caps to suggest that we're anyway approaching a climax in the market.
No, that's fair, but they're not cheap either.
Sure.
I mean, if you look at forward, we may be 19 and a half, 20.
That's right. It's not a cheap market by any
Yes, so
standards.
that's why it will
Right.
be more important for you to help our
Right.
viewers
Yeah.
go train their eyes.
Right.
So where would you look for value?
See, but the first thing is the market corrects due to top-down reasons. It never happens. You buy stocks bottom-up based on valuation comfort, but you lose it from something unexpected happening top-down. And by its nature, an unexpected development is something you're not expecting.
No.
So this market is not priced for unexpected developments. Let's put it that way. So what it means is you may want to keep some gunpowder aside to, if and when there is a correction, you may, hopefully have 5-10% money available to dip in at that time.
Yes.
And if it continues roaring, you're happy anyway, your 80-90% which is invested is anyway going to do well. So it's more a question of let's not get into the fear of missing out mode. Be happy with absolute returns, temper your expectations down a bit. Having said that, this is a bull market which will last for long, and there will be rotational cycles sector to sector. And in a bull market, it's very bad to be jumping between sectors, because you miss one, you may not get back on the train. So by and large, it's best to stay invested in companies you know well and not worry about someone else has made so much money in the last 3 months, let me go there and chase that. And then you end up missing everything.
But that I get. FOMO is not a good thing.
So just stay with proper asset allocation and with companies that you like, because this market is clearly pricing in a few years ahead now. It's not about immediate returns.
No, but not all over the place. I mean, there are still banking stocks. For instance, HDFC Bank.
Right.
It's not participating in the rally, nor has Kotak,
Right.
PSU banks.
Sure.
Do you think there is value
Yeah,
in
I mean, look, it's a consensus now amongst, I think, everyone you speak to in the market that the large caps is where the value is as opposed to the mid and the smaller ones. And one shouldn't generalize, but generally saying that
Okay.
it's correct to say that the larger caps is where really the action now should be. Secondly, the banking sector was leading the market, then it's taken its pause, and then hopefully the next leg starts. In this leg, the PSU banks are kind of rallying a bit more, because until now, all they've done is tracked earnings growth. The multiples have not really expanded. And like I've said on some other shows, that you literally have a menu. You can buy a Canara Bank on a forward multiple of 5, you could buy a PNB or a BOB on a 6, SBI on 7, and stuff like that.
Yes.
Till you get to even the great HDFC Bank will probably be in a year from now more than $10 billion of profit, and it's probably a 17 multiple for a franchise of that quality. It could easily be, the Kotak multiple is 24, for example. So there's a big gap right over there. So banking surely should be the leader of this market. But if you think of how this market's been running, very similar to the 2004 bull market, you've gone into all the infrastructure names,
Yes.
because the cyclicals are back, from L&T to the defense and the railway names. In fact, Hindustan Aeronautics is now in quartile 2 of India, which one couldn't think of many years ago. PSU banks, of course, are very much there to catch up, but a lot of these public sector stocks are trading on 30-35 times forward 1 year on FY25, which one wouldn't have imagined. So similar to the 2004 bull market, infrastructure, power, real estate, banking, and some commodities I have been participating against the erstwhile favorites of FMCG and IT and others. So that's really the typical cycle in a bull market.
Okay, but would you be wary of the power, for instance? I was just looking at the power stocks, risen between 50 and 400% in 2023. So those would be the red flags?
So look, it's a valuation call end of the day, that if you want to buy risk-free, the risk-free rate in a bank gives you, let's say, 8%, which means you're giving an implied 12.5 PE multiple. Our market is on 20 times, which means it's not risk-free. You're priced in, a couple of years ahead of earnings. There is a shortage of power, because post the 2008 crisis, nobody invested in putting up power. So there is a golden period for the power sector. We as a country are short on energy. So whether it's the oil stocks, whether it's the coal and thermal stocks, or it's the solar, and I'm very hopeful that we start developing nuclear and other renewables very quickly, that there is a whole gamut of opportunity there, and a lot of the private sector players are of scale and size now. So
I worry about the price.
Pricing, look, I've said it at the beginning that most of the stocks are now pricing the vision of the investor rather than the entrepreneur. Like, Mark Faber used to very famously say at the beginning of the cycle, the entrepreneur has the vision and the investor has the money. And by the end of the cycle, the entrepreneur has the money and the investors have the vision. So we are in that phase where when people are buying stocks on 60, 70, 80, 100 multiples, it's clearly going to be maybe a decade for them to get to that 12.5 P from which they start making the return of equity of the underlying business. And you've seen this historically, right?
Yes.
In the 90s, we said you have to buy Hindustan Lever on every Diwali, and then it didn't perform for 10 years.
Yes.
Then when the tech boom came,
It went to double digit one day.
Infosys
remember?
peaked, and then it didn't. The stock didn't perform for 10 years, even though the business did well. The great Reliance, DLF, Bharti, they didn't perform for 10 years.
So let me come to
So
this
it's
question.
possible that.
When do you exit? What advice do you have?
So the cyclicals typically, when you know there's an end of a cycle coming and this valuation euphoria is going to an extreme, you will tend to see signs of market tops where there will be IPOs or projects which are not for near term but also visionary, or there are crazy acquisitions being made, or there is a big retail type euphoria or an IPO which comes which is very large and it fails. Having said the fact that we are not a cheap market, we are not so crazy as yet. There are those what I call mini bubbles in segments of the market, but it's not yet large enough to take the entire top of the market down.
Okay, save us those blushes. But I want to ask you a little more about the red flags that we should be wary of. Those questions after a break. Stock Markets Outlook 2024, that's what we've been discussing with market veteran Manish Chokhani. Before we went to the break, Manish, you gave us an idea of stocks that still have value and where, value has been replaced by vision. But for the market as a whole, what may be the red flags?
See, markets always will fall or correct on external factors. It's never that a company individually can disappoint and take the whole market down, or one sector can take the whole market down. And the risks are actually fairly well known to most observers of the market, that the mothership of all equity markets globally is USA. The US market has been very, very narrow for a long period of time, where the so-called Magnificent Seven are ruling the roost. And you can see chinks in the armor of at least 5 of those 7.
Which are not AI stocks.
Like Apple is already been declining in quarter on quarter in terms of sales. So it's still growing, but it's not something which should be holding a $3 trillion type market cap, which is close to our entire market cap. The issues which are facing Alphabet, which is at the risk of disruption from AI, plus the regulatory pressures on them. The issues which are arising in Tesla, and especially now with the way the Chinese have come up with BYD and others. So I won't elaborate all of them, but other than say Nvidia or Microsoft, the others could be at some risk of disappointing the market. And when typically something like that breaks, it causes a steep correction because the risk off trade comes in, and that risk off then naturally comes and affects us far away. You also know the way the G7 have been running such loose, irresponsible fiscal policy. The UK to me seems to be the canary in the coal mine, that they've broken away from EU. They have a terrible trade deficit, they have a terrible fiscal deficit. If anyone were to rate them the way they rate India, it would not be investment grade.
It won't be investment grade.
But that currency has not moved. Like the Japanese yen has gone down 50% in a year, but the pound sterling hasn't gone. And the US, every time they raise the debt ceiling, they're at $35 trillion of debt. And that can't hold the reserve currency status forever, pulling wool over everybody's eyes and just printing their way out of trouble every time. So already you see the signs from the Chinese and the Russians and the Saudis saying we don't wish to participate over here. It might take a bit longer to break, but you need one bond market failure or one blow up of a bank, which, with 4-5% interest rate hikes, someone has taken big losses somewhere in the system. And it can't be one Silicon Valley bank which has blown up. It can't be that the Fed is holding all the losses over there and there are no consequences. So something like that breaks. How it breaks, I don't know. We all know the issue of what happens in East Asia if China decides to flex its muscles. Now that the US is out of its arsenal supporting Ukraine as well as Israel. These are unknowns. But if they come, they can put a light under our sanguine Goldilocks scenario to our markets. Even domestically, while everything looks pure blue skies, we know there is the post this election, and we are all assuming there'll be continuity of policy and direction and government and so on. But when these new seats have to be recast between North and South, there's the Uniform Civil Code, there is the CAA, there was agricultural
so there can
reform.
Be social disruptions.
So we saw things which happened which put sentiment back. It doesn't change the underlying fundamentals of the country, but currently, see, we are pricing ourselves for clear blue skies. Everything will work as we want every month for the next few years, not just a few months. So that warrants some caution. But again, like I say, a bull market exceeds your expectations on the upside, the way a bear market exceeds on the downside. So I still personally believe that in this decade, India is a big economy in a sweet spot of the type which may cause a gigantic bubble to emerge here, like we saw in Japan in the late 80s, we saw in China. And therefore, it's not only about economic performance, it's about how the market prices that economic performance, which determines your long-term returns. Yeah. So I'm hopeful we don't cause a bubble, and we do get these minor shocks from time to time, so we kind of go up gradually, climbing a step rather than taking an elevator up and then the elevator down.
Absolutely. Actually, you were explaining to me the China-India performance from 2008 to now.
I mean, China has been the best economy of this world for the last 20 years. And if you are a stock market investor, your returns are zero. Because
from 2008 to today.
Yeah, even 2000 to 2023, because the last 2-3 years have been so terrible, they wiped everything out. And they had 2 big spikes in the interim. I don't know if you can pull up charts and put them
we are
up.
showing the charts.
But if post the 2008 crisis, they spiked. In the mid 2010s also they spiked. And that's the creation of the Alibabas and the Tencents and all of the world, while the rest of the market suffered. And China is cheap. China is less than,
cheap,
it's less than half of GDP is the market cap of China. We are probably at 1.25.
So you see that as a competition taking away money?
So it's a very consensus trade in the world to avoid China at all costs and be overweight India. There are no investment committees in the world who would sign off on putting fresh money to China. And the market doesn't just turn when it's cheap. The way I'm saying, our market won't just turn because it's expensive. You need some catalyst. And in China, until the locals start getting confidence to come back in their market, because they are so nervous with the money they've lost in property as well as in stocks, and with the regulatory changes which come unexpected. So the mood is very, very, very negative. So value buyers are fishing there, and stocks are really cheap. I mean, I can't begin to tell you how cheap stocks are in China.
Okay, so that's something.
But if you look out 3 years from now, will the Chinese market be double? It's probably a good bet to take. I can't say that for India, much as I'm patriotic and I'm fully invested here.
Yes.
But we've paid a lot of price.
But then there is a political risk also in China,
absolutely.
which perhaps foreign investors are worried about. No, let me come back to India and to stocks.
Sure.
The Zomatos, the Nykas. I mean, what's your view? Are the digital e-commerce, the tomorrow stocks?
Sure.
Look,
they are great businesses. They are run by very, very competent people, and they've delivered and executed very well. They've virtually become monopolies, oligopolies, or call them what you will. The pricing, as a value guy, I find it hard to digest that I'm paying pretty much for 10 years of perfect execution, no competition, rising margin profile. It's a hard bet to take. But can they deliver it? Can they execute it? Yeah, I mean, sure.
But I'm going to make money after 10 years.
Well, I don't have so much money that I have to worry about what I've missed. And one thing I've learned in the market, you don't ever have FOMO. If someone's making it somewhere and they understand they are justified the returns they make, if I understand something else and I can play over there and make my adequate returns, we should be happy with that. And that's all I would say for most investors. We can't have a circle of competence which covers every stock in India. Go where you understand. Valuations, to me, all I've learned in life is my ability to predict is very, very bad.
Okay.
So my only defense
really
is buying cheap. No, no one knows it, right?
Yes.
You could be president of United States and you don't know what's going to happen. So no one can predict the future. Your only defense, as all the gurus, Buffett onwards, have said, you buy at a price which is so good that you then don't worry about all these external risks and a funny person coming and running the company and so on. The price what you pay is really what determines your returns.
You discuss the PSU banks or even banks, even private banks in that vein, that they are not overpriced.
They're not at all. I think they're still very, very solid returns.
Anything else?
On scale.
Anything else?
So it's a rotational bull market. So from time to time, things fall off the radar.
Like pharma,
Like pharma, for example, last month was a dog sector and it's been performing very well. So like it will happen in this bull market that certain times it's, the defense and railway stocks are leading. EMS, for example, was something we spoke
what about
about a lot
EMS
last
actually?
year.
Since the government has put its might behind.
It's a complete white space sector today, and I've often given the analogy of it being like the Maruti moment when Suzuki came into India and it changed the whole automobile sector. Same thing when GE came to India, they changed the whole IT services sector.
Yes.
The whole ecosystem is going to get cast with the coming of Apple in India. Apple's on a $10 billion run rate from India. Their ambition is to be $100 billion. The entire ecosystem is being made. We are still at the very bottom end of the value addition chain, and I know very famous people talk very dismissively about that we are screwdriver guys. You start like that. You don't reach the top of the semiconductor chain straight away. Design and the machinery making is very, very far away, and these are consolidated global businesses. But assembly, packing, electronic, if you don't make it, you'll have a big import bill. So it has to be done in any case. The industry is still very, very small. Valuations are fantastic. There are 60 multiples, 50 multiples on FY25. So you must be a real believer because these are low margin businesses as well.
Yeah. So
their ability to deploy capital, produce those returns in a modular fashion rather than whole hog, it's not easy. Okay. And there is no easy return in this market, let's be honest about that.
Great industry, great business, but
there's a
are
price.
you buying at the right price?
There's a price for everything.
Okay, now we have a budget coming in. I mean, it's a vote on account and then it'll be a full budget. What's your wish list?
See, budgets, fortunately, they've made it a lot of a non-event, which is the way it should be. But when a new government comes in and a third term, and presumably it's a very strong government, there are a lot of big policy things which I guess are waiting in the arsenal, and one would love to see that happening. For example, from a financial sector perspective, we've missed privatization for many, many years.
Yes.
The market's giving fantastic valuations. It wants something to give the supply to cool off. So that would be one immediate thing. Again, from a stock market,
and it will benefit the government.
It benefits everyone, and it creates fiscal space for you to continue your capex expenditure, which has been one of the basis of this entire bull market. What we've done on infrastructure, railways, ports, airports, absolutely fantastic and stunning, and more power to them. There's been asked by no less a person than Uday Kotak to please stop taxing our dividends twice. That's all we live by. Don't tinker a lot with capital gains tax and change the mood of people. That's on a very sort of selfish financial perspective.
For all of us.
But as a nation, I think we've not fixed our energy bill for years. So not having enough of drilling happening, even the nuclear deal which was signed in Manmohan Singh's tenure, 15 years later, has still not kick-started. China is building nuclear reactors, small ones, by the dozen. And we will need a lot more energy and fuel to not hold back this economy from growing. We already have a power shortage as we speak. So that has to be fixed. A lot of our FTAs, which have been pending for very long, like Bangladesh exports a lot more textile than India, and we are the natural beneficiaries of that. A lot of those are pending to be signed. If they can get accelerated and signed, becomes dramatic. For local manufacturing, which we are also bullish about, you need this labor reform to happen. You need a lot of this agricultural reform to happen so that industry can take space. So there are lots of things which are out there, apart from what Sanjeev Sanyal talks of the boring process reforms, judicial reforms, because what Manish Sabharwal calls the regulatory cholesterol has to be removed from our system. So there's a lot of work always to be done in a country like ours.
And one hopes
but we live as optimists because things are in the right direction and they can only get better.
Okay. Now, Manish, I'm being warned, we are out of time. So now the most important question for me. I believe your big hobby now, or maybe your mainstay now, is music. I mean, you're not so much in stocks as much as in music. So you have to sing me a song.
My gosh.
No, I mean, you've given, there is a YouTube playlist.
No, that's just for my friends and family, which...
No, I heard one of them. So now please sing for us.
Well, given it's the new year, I'll sing you a few lines from a very favorite poet of mine is Gulzar.
Okay.
And I sing his old song, Dil Dhunta Hai, Fursat Ke Raat Din, or I sing Tum Pukar Lo.
Okay.
But for the new year, the appropriate song would be Aane Wala Pal.
Oh, okay.
Jaane Wala Hai. Ho Sake To Isme Zindagi Bita Lo. Pal Jo Ye Aane Wala Hai.
Golmaal.
From Golmaal, that's right.
Please.
Ha ha ha. आने वाला पल जाने वाला हो सके तो इसमें जिंदगी बिता दो पल जो ये आने वाला है. I think I should pause at that.
Excellent.
Or you'll get everyone switching off.
No. That was a brilliant way to conclude the conversation and a message.
Thank you.
That let's enjoy the good
Sure.
times we have had and may they last in 2024 as well. Thank you very much,
Thanks for having
Manish.
me.
I'm very sure this is going to be one of our best shows. Thank you so much.
Thank you so much.
Our ancestors have practiced for centuries.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority. Wall Street is waking up. Europe is already trading. And Manus Cranny and Danny Berger are making sure you have the news, data, and analysis you need to set your agenda. Micro, macro, and everything in between. Manus in New York and Danny in London follow the money around the globe. Take a daily deep dive into risk and help you make informed decisions for your trading day. Watch Bloomberg Brief, weekdays at 5 a.m. Eastern, only on Bloomberg. Context changes everything.
Live from the City of London for our audience worldwide, Bloomberg's The Fed Decides starts right now.
Imagine generating regular income from your investments without market volatility. Introducing Allcraft, the smart choice to invest in fixed income products that generate predictable